Sikhs from around the world by showcasing their professions, passions, and perspectives. I'm your host, Jaspreet Singh, aka the Nihung. ਵਾਹਿਗੁਰੂ ਜੀ ਕਾ ਖਾਲਸਾ ਵਾਹਿਗੁਰੂ ਜੀ ਕੀ ਫਤਿਹ.
Waheguru Ji Ka Khalsa, Waheguru Ji Ki Fateh.
Jaspreet Singh, welcome to the Net Nihung's arena.
Oh, thank you for having me.
No, this is awesome. For people who don't know, Jaspreet Singh is the founder of Minority Mindset, and you have a YouTube channel and a newsletter where you give financial advice. And you talk about all kinds of topics from wealth building to the stock market to real estate to whatever's going on. And it's an awesome resource. If people aren't already subscribed and watching, they should be.
Oh, thank you.
No, and it's exciting to have you here. And the reason I thought of you is because of all this stuff going on with GameStop and AMC and all these shorting of stocks. What is shorting? What does that even mean? What are hedge funds and what are the hedge funds doing? But before we kind of dig into that, let me just give you a chance to kind of introduce yourself, give your background for my audience, so they can kind of get to know you. And I really am looking forward to this conversation today.
Sure. So, like you said, I mean, you hit everything. My name is Jaspreet Singh. I started a company called Minority Mindset. We are now a financial media company. I never intended to start a financial media company.
Wait, hang on. What does that exactly mean? What is a financial media company?
I'm trying to figure that out myself too, but that's what people call us. But we post content on the internet about finance. So I guess media means content and finance is our topic. So by default, we're a financial media company. What does that mean? I don't know exactly, but we're trying to figure that out ourselves.
Okay, I'm just guessing that there's maybe some kind of, that's a legal disclosure that you're not a financial advisor.
We are not a financial advisor, so that is true. So that's part of the reason why. But I kind of got into this really on accident. Like a lot of Apne Desi people, my parents told me when I was young to become a doctor, and everything else is no. So, but I always had this like entrepreneurial bug. I don't know what it was since I was a kid. I was like mowing people's lawns when I was 10 years old. I was doing a paper route in elementary school. Then I started playing tol at weddings when I was in high school. So, I kind of just always did things outside of kind of, I don't know, normal. And I got into like finance and investing kind of indirectly because I was making money and didn't know what to do with it. So I started reading books. And, I would talk to family like, okay, maybe I should start investing. And they were like, no, don't worry about that. Go become a doctor. And then everything else will just fall into place.
Sure.
So that was, kind of the way I was kind of raised. And then I just kind of fell into this money management, investing, entrepreneurship stuff myself. And I was so interested in it. It's just like, I don't know, when you find something you love, you kind of get obsessed in it. And so I really just enjoyed the whole process. And so
now you also you grew up in Michigan, correct?
Yeah. I grew up in the Michigan area.
Okay.
And so, it's just one of those things. I enjoyed it. And I was working on another company. He has created the sock company. As I was launching it, we got scammed by a marketing company. And after I got scammed, I was like, okay, what do I do? So then I started this thing called Minority Mindset. Why did I call it Minority Mindset? I honestly don't even remember exactly why. I just know it was like, I had this mindset of thinking differently than the majority of people. But the whole purpose originally was just to help people not get screwed over the way I was when I was starting a business. So I was just
that's really interesting because just to interrupt here, I love the name Minority Mindset because to me, I had no idea what your reasoning was. But when I heard that, it hit me in two ways. First of all, minority mindset being that this is the mindset of minorities, like literally like racial, religious minorities that come to America and are looking for opportunities, and they have a different way of thinking. And then also people that try to build wealth or look at things from an entrepreneurial point of view are also minorities. So it's a minority way of looking at it from the financial mindset. So those two, I thought it was a perfect way to attract the different crowd, kind of.
Yeah, and that's, you really hit it on the head, especially with the second one. We focus, for us, the minority mindset is all about your mindset. It's all about the way you think, and it's thinking differently than the majority of people, because we all kind of, especially in the financial side, we grow up learning, go to school, get a job, and work. But there's so much more that you can do. There's so many more opportunities. Like, there's so much more, especially in the Desi community, because I think we're like very limited in career choices that we're told. It's doctor, lawyer, engineer.
Yeah,
that's pretty much the extent of it. But there's just so much more, and I think a lot of us, there's so much creativity, there's so much potential, and we lose that when you're told to become a doctor before you're 10 years old. And so, there's just so much opportunity that, you can do whatever you want if you understand money. Like, the premise makes sense. Our families come here for a better life because, I get that. And education is that kind of route out of poverty.
Sure.
But if you want to do something else, and the creativity, if you can take care of yourself financially, then you can do whatever you want.
Yeah. So did you go to school for finance, or did you also take the typical? Because like, I know for me, I was pre-medical. I was computer science. And then I was at Ohio State. So I grew up in Ohio.
Okay.
And then got a job in Troy as a software engineer, started working that, then got laid off in 2003 and fell into real estate.
Yeah.
And once I got into real estate, it was a game changer for me, because now all of a sudden I was doing something that I was very interested in. I enjoyed it. I was passionate about it. But I was also on that track because my brother's a doctor. All my friends that I grew up with are doctors. They also married doctors. And I also married, I married a pharmacist, so a lot of those pressures from like immigrant families, Indian families particularly, I lived through it too, and I was kind of the black sheep of the family by not going that route.
Yeah, exactly.
What about you? What did you do?
I went to college thinking I was going to be a doctor. So I went to University of Michigan, and I majored in psychology. It was called biopsychology, cognition, and neuroscience. And I picked this one because it has the coolest sounding name and the easiest classes. So I didn't honestly learn too much. It was a subset of psychology. I don't even remember what I learned, to be honest. And then I went to law school because I graduated college, and mom and dad were like, you cannot not have a professional degree. So then I went to law school and became an attorney. But as I went to law school, I also was kind of building my businesses full time, because I knew that wasn't what I wanted to do. So during the second half of my law school career, I actually went part-time in school so I could focus more on business.
Oh, wow.
Everything I was doing. So everything that I learned in the financial space was not kind of your typical education. It was kind of just through doing, reading, learning, meeting people, and just doing was the biggest thing for me.
Experience, basically.
Yeah.
Oh, that's awesome.
Expensive experiences, making a lot of mistakes.
Well, you can say that, but college is expensive too. Graduate degrees are expensive too, And,
so I paid for it twice.
Yeah. So, I think experience is huge. I tell people all the time, like, because they're always asking me, they want to start getting into real estate investing. I'm like, you know what? You just got to buy a house. You just got to buy a house and figure it out. It's the best thing you'll ever do if you want to learn.
Yeah, it honestly is. I mean, I talked about, even on our channel, I talked about my worst real estate deal ever.
Yeah.
Because
watch that video.
Yeah. I mean, you go through one bad deal and you're going to know everything about real estate investing. Like,
exactly.
It's just like when things go right, it's easy. The tenant's paying you and it's
Yep.
simple. But when things go wrong, you learn everything all like in a minute, essentially. So
Yeah.
you just got to go through it.
So now when you were building these businesses, you were still in school doing your law degree. You started building businesses. Did you ever practice as an attorney then once you graduated?
No, I never practiced after graduating. I did whatever you had to do while I was in school.
Okay.
But I never practiced as a traditional attorney. I mean, what I do is, I have a lot of connections with attorneys.
Okay.
And so I do referrals. People come to me with business questions, real estate questions. And I'm like, all right, well, let me connect you to somebody who's way better than I am.
Right.
And so that's what I do. I don't do any legal work myself.
No,
I don't think anybody wants me to do their legal work either.
I hear that's how Sam Bernstein and them work too. They run these advertisements on TV and they get all these phone calls, but they don't actually take those cases. They refer them out to other people and collect a referral fee.
Yeah, that's exactly what they do. They spend Sam Bernstein, particularly, I think they spend about $10 million a year in advertising.
Wow.
So
that tells you they're making a lot more than that if they're willing to spend that much money.
Yeah, I mean, at the core, they're a marketing company more than an attorney business. I mean, they're just a marketing machine. They drive leads for their attorney business and just refer them out to sell them to not sell them particularly, but essentially to sell them to other law firms.
Right. So so you never actually practiced an attorney, but you're developing these businesses. You talked about your real estate deal. I actually watched the video. I feel like I watched one video years ago about the same house, your first house.
Yeah.
And then you recently released another video about that same deal, kind of recapping it and
explaining it. Yeah. So YouTube is weird. I released that video, my worst real estate deal, when I sold the property. Like the week I was selling it, I recorded it. And as soon as I sold it, I released the video. And this was I think this is 2016. And then YouTube is weird where they just randomly in 2021 started really promoting that video again. So you had this random group of audience starting to watch this video now and asking all these questions about the video. So I was like, let me kind of dive a little bit deeper and explain what happened, because there was all these people watching it. So that was what the explanation was for, to kind of answer the questions that people that are watching it now were asking.
Yeah. And, I'll link to that video in the description when we publish this so people can watch it. But can you just briefly just kind of go over what the top view of that deal was and what you learned from it?
Yeah. Okay. So it was actually my third deal. And this was right after the real estate crash. And I was such a novice. I mean, I had no idea what we were going through. I knew we were in a real estate crash, but I didn't know what that meant, because I was still really young. And so I did a couple of deals that were really cheap. I mean, these are under $10,000 properties. I essentially found this property management company that was not a real property management company. And they connected me to this contractor who was not licensed, but said he was licensed. Contractor was a nice guy. I was working with him for a couple of deals, and, he did work really cheap. He needed work. And then he was like, hey man, you got to start buying properties in Detroit, because everyone probably heard you could buy properties in Detroit for $1 or $5,000. And
I sold several of those. Yeah.
Yeah, exactly. And so he was like, you need to buy some Detroit stuff and you can make a whole bunch of money. And I said, okay, let's do it. Found me this property in a decent area. It was $17,000. And he was like, don't worry about getting a property inspection. Don't do your own private property inspection. I already went through it. I know it's fine. I was like, okay, whatever. Okay. So I did it. I bought it. And he wanted $5,000 or $5,500 to do the work. Paid him half. I think it was half. I don't remember the exact numbers, but I paid him a check. And essentially 2 months go by. He doesn't do anything. And I was like, what's going on? Another couple of months go by. He's running into his own financial trouble. So he essentially just runs away. I paid him some money. He doesn't do any work. Now I'm stuck with this property that, we're months into, no work has really started. I had this other kind of deal that I was working on, and there was this guy who was the on-site manager there who was causing issues. And I was like, I started talking to him, and he was we had this idea. I was like, why don't you just live in my property? I won't charge you rent, but then you don't charge me labor to do the work on the property.
Wow,
And
that's
it
smart.
seemed like a great deal. Yeah, it seemed, I've seen it work in a lot of instances, but in this situation, it didn't. So I gave this guy a charge, like a Home Depot charge thing. I created an account so he could just charge my account. He starts buying all these things. I'm thinking he's buying these things to do work at my rental property. He's buying these things to do work at other people's properties. So now he's, double dipping on his profits because he's, making money there and not paying for materials.
Yeah. You know what
And
happens with me? Every time I do that, because we do that too with the Home Depot.
Yeah.
We have the charge account. The contractors will they'll buy the materials for your job, but then they also buy lemonade and Snickers bars and a bunch of other stuff, and then you get the receipt, and I'm like, what is all of this?
Yeah.
But then if I have to buy you Coca-Cola and whatever just to kind of keep things going, that's okay. But yeah, people will try to sneak stuff in, like get something that they need, like light bulbs for their house.
Yeah, I've
like
seen that. I mean, it got your pros and cons. So.
Yeah, so you ran into a little bit of him charging on your account for other jobs he was working on.
Yeah, and then he wasn't doing the work, and then essentially, long story short, he destroyed the property. We had to evict him. The property was in worse shape now a year later than when I bought it. And then get a new contractor in there. Got to start everything over. And now we realize that there's even more issues with the property. We have to redo all the plumbing. We realized that a previous tenant had dumped cement down the main drain, which destroyed the plumbing. We had to redo all of that. We had like issue after issue with the city inspector because this is when Detroit was like on the verge of bankruptcy. So, it was just like issue after issue. And then when we finally got the property close to ready, somebody broke into the property, stole our hot water tank. We fixed that, got a tenant in there. The city comes out even after we're licensed for no reason and says that, they find out that apparently this tenant is running an illegal babysitting operation. They fine us. We got to kick out the tenant. And at that point, I got to sell this property. So that was it was a long process, but that's kind of the gist of what happened.
I see. But a lot of lessons learned there.
Yeah. You could say that again.
So then after that deal though, did you continue investing in real estate, or did you kind of slow that side down a little bit? Because I noticed that your channel focuses a lot more on other financial topics, and real estate is just one of them.
Yeah, I mean, I still do real estate. I think the only reason maybe why you maybe slowed down is because I invested more into the business, but definitely was still involved in real estate and actually looking to get more involved this year. But I didn't do anything in Detroit after that deal.
Yeah. That was actually one of our rules. My partner and I, we'll pretty much look anywhere, but we won't buy in Detroit. And it's not that, Detroit, there's a lot of opportunities, but exactly for the reasons you're talking about, we had already known to avoid it because you're going to have problems with people breaking into the property, stealing they steal the copper. That's what they used to steal, is the copper.
Yeah, I remember that. Yeah.
Furnaces. They'll just rip it all out and just take it with them. Then there was like, okay, get a contractor to stay in the property, like you're saying, and work on it. But even that was trouble because now you got to find a person who's willing to do that, that's trustworthy. So we just avoided Detroit, and we've been, knock on wood, we've been lucky with most of our investments. We've had some trouble once too. We've learned lessons we've had a couple that were a lot of trouble, and we learned a lot from them. But that's goes back to what we were saying earlier. Real estate is the kind of business that you kind of just got to jump into it and learn as you go.
Yeah, exactly. I 100% agree with that. I think that really goes for any business though. Like, it's I think one of the things, like even when we hire people for our team now, it's like, especially when it comes to like marketing, when people apply, I'll have this marketing degree. I got all this marketing experience. If you come work with us, the first thing we say is you got to forget everything you learned and you got to start learning marketing from, a real kind of doing perspective, not a textbook perspective.
Yeah. So I know I want to get to a lot of things, but you're saying some things that are so interesting to me. So marketing wise though, are there people that you follow that you think really hit? Like, is it Gary V? Is he a guy that you follow to kind of model your marketing? Who's out there now that's doing it the way you think it?
I don't, I don't really follow people like that. I'm kind of weird where I don't really watch YouTubers. I don't really follow other people. I did for a little while, and I kind of just like for me, it's like when you follow other people, you kind of like want to do what they do. Right. So I just like unfollowed everybody, and I don't really watch too much of what other people do. I mean, I look at good marketing. Like, I think good marketing is like when I see an advertisement that really catches me and makes me want to like intrigued and makes me want to buy something. And I look at that and I look at what's going on. Like, I look at, for example, one of my favorites is Dollar Beard Club. Those guys, if you've ever seen their advertisements, it's just so bold, and just they speak exactly to their audience, and it's just so fun to watch. It's like something that you've never seen before, and so that inspires me, because it's like they did something that no one's ever done, and they're crushing it, and it makes me want to buy their stuff. So it's like that's what I like.
So interesting. So your marketing advice is basically the same as the real estate advice. You got to forget kind of what you learned, jump into it and start doing it, and figure out what's working. And if you see something you like, analyze it and break it down why you think it's working, instead of emulating it or copying it.
One of the core values we have in our company, we just created core values. And one of them that is like a kind of a real defining point of us is crazy is good. And with everything we do, it's how do we be crazy? And when I say crazy, it's not just, it's just being different, like something that's no one's seen before. Don't be vanilla, be something like out there. It's kind of like, how do you shake things up?
Yeah. But that's kind of hard to do, right? Because if you're not comfortable, it can be, you got to have that. I don't know. I find it, even like with this podcast, I find it difficult sometimes to promote it, because you're putting yourself out there. People are going to criticize you and make fun of you and stuff like that. And I'm sure a lot of my listeners may not know. Now, you have like 1,000 times the followers that I have.
I don't know about all that.
But your channel, first of all, you have like over 10,000 subscribers on your YouTube channel. I might be even more. I might be way undershooting that, but you are out there for you have people following you all around the world even, and people comment on your stuff. And what was interesting to me is, because I'm a guy that gets entertained by the comment section. Okay. Yeah. So when I will go to the comment section, and I expected to see somebody attacking you, for the way you look, or mistaking you for, Muslim or something, and trying to put you down.
Yeah.
And what I saw is almost everybody comments about your content. You actually have, it's almost like people forget what you look like because they're listening to what you're saying. Yeah.
It's strange. I mean, it's amazing, but the way it works is like, anytime a video kind of goes viral on our end, that's when you see it gets shown to a new audience.
Yeah.
And when that happens, I know when that happens, but I can look in the comments. As soon as I see the Osama bin Laden, the terrorists and the ISIS, and when I see that comment, I say, oh, a video is going viral. That's how I know. But the cool thing about it, is our audience is amazing. We're actually approaching 900,000 YouTube subscribers.
Oh, sorry. My number's way off.
No,
you're almost at 1 million.
Yeah. And our audience is amazing. What I mean by that is like,
oh, you know what? Sorry. It was like 10,000 Instagram followers or something. Maybe I got those numbers. Sorry.
Maybe my personal Instagram is around there. I don't really promote that, but when people will start saying these racist comments, our own audience will just destroy them. I mean, you know how social media works. There's no civility. It's just destroying people. And so like one person will say, oh, who is this terrorist? And then it's just like, boom. It's like they're not like like these are just like regular people, and
Yeah,
they're just
and they're
like,
coming to your
no, he's a
defense.
Sikh. I'm like, that's awesome. These people know what a Sikh is now, and they're like just destroying this person. It's cool to see. I'm never a big fan of like, social media abuse, but it's just like it's crazy. Just
No,
I
it
mean,
is. It's amazing because, and so are you leaving those comments up? Because this is something I've run into too when I do advertising for real estate. Every once in a while, like similar to what you were saying, you can tell when something's going viral or when it's getting more exposure. You'll get the comment, one racist comment. And I'm always debating with, do you just delete it and just remove it so it's not on there? Or do you leave it up and kind of let people interact or try to interact in a nice way? Because it really is important for the Sikh Panth, for people that have the Gursikh Swaroop, to put themselves out there and show off their talents and their abilities. Because like you said, you will build this community that will come to your defense.
Yeah. Personally, I think everyone has their own way. I personally don't delete comments, whether they're supporting or disliking me, whether they're racist or they criticize. I don't delete any comments. The only comments I delete are the spam when people are trying to solicit money, like, oh, WhatsApp this person, I'll show you how to make $1 million. Those are the only things that we delete. Everything else, that's there we keep, because we talk. I mean, I talk openly on our channel. I talk about racism, things that Sikhs have experienced, and I think, I don't really do this on purpose. I mean, it honestly is just tedious to delete all those comments because we're large, so we get a lot of those comments. It's just impossible to delete all of them. But I think people start to see it too, because they see, wow, so people do experience racism. Even if you might not have ever experienced it in your life, you can see what I'm just making here free videos. You can watch about investing your money, and people say, oh, I'm not learning from Osama bin Laden, and then people say, "Oh, what the heck is wrong with you?" It's learn for a while or leave.
Yeah, no, that's amazing, because I was fascinated when I was looking for it. I was actually searching for those kinds of comments, and I've very few. And I was like, this is incredible. I mean, I've always dreamed of stuff like that, like Sikhs being on TV or whatever and contributing, and people just accepting them. Now, same thing with that Jaspreet Singh that was on American Idol.
Yeah,
I was surprised like how much people support. Growing up in the 80s and the 90s, I was in college in the 90s, but growing up in the 80s and stuff, almost every day at school, I'd be called some kind of name. Gandhi was the most popular. And I was like, Gandhi?
Of all people.
Of all, the little bald guy? You think I look like him?
Man.
I even had a teacher. Teachers would make fun of you, and you just kind of go with it. I never thought to myself, oh my God, my teacher's a racist, he hates me. Just called me towelhead, and I just accepted it.
I think that you get used to it after a certain amount of time.
Right. But the idea that now watching people like you putting content out there and seeing that you've actually won people over with your abilities, with your creativity, with your content, and that is actually pretty amazing.
It's crazy that you say that, because it's still hard for me to believe that I've done that, because I used to dream the same thing. Like when I was young, I used to be a big fan of WWE back when it was WWF. Yeah. And I remember The Rock, being there, and they would talk about, the people's elbow. And I was like, man, if only The Rock was a Sardar, like, or like Ben Wallace, there would be like Fear the Fro. Oh man, what if he were a pug? We're the Fear the Pug, just like this kind of those like, what ifs. That would be so cool. Yeah. So yeah.
So your marketing mind was already working back then.
I don't know. I just thought I was like, man, that would be so cool if there was a singer doing that.
Yeah.
Or a chord.
Yeah. Yeah, no, absolutely. Actually, that was one of my frustrations. Like, this shows my nerdiness, but like Star Trek, Khan, the Wrath of Khan from Star Trek, Khan Singh was the character. And if you watch the actual original TV show, when he was on there, he actually had long black hair that he put like in a gut.
And, oh, really?
Yeah, he's a Sikh. In the character, in the movie and in the show, it's a Sikh. And even when they drew pictures of him, there's a girl on the Starship Enterprise drawing a picture. She drew him with his bugatti on. And he was
Wow.
a Sikh that conquered Asia, but he was genetically modified, right? He conquered Asia. Well, his name was Khan Singh, and he was a Sikh character, but he wasn't portrayed that way. Like in the movies, he's Ricardo Montalban is playing Khan Singh, and he doesn't have a beard and he doesn't have a pug on, but he's Khan Singh. And I always thought, God, it would be so amazing. Same thing, Nemo, Captain Nemo is a Sikh. He's a Nihung Singh in the original book by Jules Verne or whatever. Captain Nemo is a Sikh. He's a Nihung Singh.
I didn't know who Captain Nemo was until people started commenting, "Hey, you look like Captain Nemo, Captain Nemo." And I was like, the only Nemo I knew was Nemo the fish.
Yeah.
I'm like, what are you guys talking about? So then I started looking up Captain Nemo. So I have an idea.
Yeah, so Nemo the fish is named after Captain Nemo, and like these are all the connections. But I would think the same thing. Like, God, wouldn't it have been so cool if these characters were actually portrayed as Sikhs? And I think maybe things will change now, but
I think we're heading towards that direction. At least I hope.
Well, Jinder Mahal was WWE champion.
Jinder Mahal was my man.
I couldn't believe it. I'm like, oh my God. That wouldn't have happened in the 80s. Iron Sheik was the bad guy. Jinder Mahal would have been the bad guy.
Jinder Mahal, when he came to Rise, I was so happy. I woke up every morning just like thinking of Jinder Mahal. I bought his apparel. When he had the Punjabi prison match, I had the biggest party. That was the first time I ever bought pay-per-view. That was, oh my God, like my house exploded when that Punjabi prison match happened.
Yeah, I mean, things are changing. Arjun Pullar is a UFC fighter.
Yeah, Arjun Pullar he's a G.
Yeah, it's awesome. It's really great, and it's good to see at times, kind of catching up. Yeah. But okay, getting back to your story. So at some point though, after this real estate investment, you were going to get in this marketing thing going. You started cranking out videos. I mean, and you have a lot of video. I don't even know how many videos you have out there.
I don't think I know either. It's more of somewhere in the hundreds. I don't know how many.
Yeah. But you're getting all this traction. And what I start hearing is like, you're talking about like what is actually saving money, and is it worth it to save it, or should you invest it? And all of these are amazing points. But the thing that really, got me to think, okay, we got to get Jaspreet Singh on, is all of this stuff going on with the stock market and the shorting and all this stuff. So, why don't you explain a couple of things first? Let's start with the hedge funds. What is a hedge fund, and what do they typically do that started all of this? But what is a hedge fund, and how do they invest?
Hedge funds are just big money managers. They just have a lot of cash, and hedge funds can be created in a few ways. You have some hedge funds that are essentially private wealth management funds, where you have this really, really wealthy person. They have billions of dollars, and if they're a stock market person, then they create a hedge fund to essentially create a loophole for them to manage and invest their own money and get tax breaks and whatever. Other hedge funds, they have other investors' money. And so hedge funds are essentially these, you think of almost like banks. They just have access to huge sums, almost unlimited sums of money. And if it's not their own money, they use debt. So they just have unlimited money. Big money hubs.
Yeah, we're talking like they're investing hundreds of millions or even billions.
Yeah,
right?
Hundreds of
big
millions
numbers.
Billions. Yeah, huge. Like insane. Like the way these hedge funds make money, they just charge a percentage off of their fee of their assets, and then they take a percentage of the profits. So like, for them, it's just a numbers game. How much money can we get under our management? That we
so like if you're managing $100 million and you only charge a 1% fee, you're making $1 million a year just managing somebody else's money.
Yeah, and that's like small time.
That's small time, right? Okay.
Yeah. So you think of a hedge fund just as a big money manager, and when you have that type of buying power, you're naturally just, you have a lot of influence. You think of it like Warren Buffett, right? If Warren Buffett goes out, well, to give you a real example, earlier, I believe this is 2020, he came out and he said he was buying shares in a gold mining company.
Okay.
And as soon as he did that, or as soon as that was announced, that gold mining company shot up like 12% because everybody who is what they call a value investor, which is what the type of investing Warren Buffett does. Everybody that follows Warren Buffett is like, oh, Warren Buffett's doing this, so let me follow him. So you saw this huge flow of money doing whatever, he's doing.
Right.
So hedge funds, they kind of have the same influence where it's like they're just big sums of capital and they can move markets essentially because they have all that money. And so the issue, kind of the whole drama is like hedge funds, because they're so, it kind of goes into the too big to fail model. Banks, you hear about banks all the time. When the 2008 crash happened, these banks were going underwater because they were making risky investments. And hedge funds, some of them, they invest outside of stocks too. But, when these banks make risky investments and they start losing money, it's very hard for them to actually lose money because these banks and what they do, they can buy insurance on their investments. These aren't things that regular people can buy. So if they start losing money, they can go to their insurance. And so what happened in 2008?
That was like AIG. AIG was an insurance company.
And then the insurance company almost goes bankrupt and the whole system fails. But so you have these banks that are just, they control everything. And then when they make these risky investments and things fail, they get bailed out. And who bails them out? The government. Where does the government get their money? Taxpayers. Regular people, you.
Right.
And so in 2008, banks got a multi-billion-dollar bailout for making risky investments, and they didn't have to pay the price. While people who had money in their retirement accounts, or 401ks, they saw their accounts get cut in half, and if they sold, they lost, and they didn't get anything. Same thing happened in 2020. I mean, we saw the stock market crash. We saw an insane bailout. I mean, we saw the Federal Reserve come in and just, for the first time, start buying corporate bond funds. So they were just injecting hundreds of billions of dollars into the market. They essentially said that they will inject an unlimited amount of money into the markets. And the way they do that is by throwing their money into these securities, these bonds, which are held by private institutions, so banks. So it's an indirect way for money to be printed and be given directly to Wall Street. And
right, because even when they give it to the banks, what the banks do with money that they hold is they don't actually hold it in the bank, all this money that everybody's depositing there. The banks take all this money and invest it, because banks can be both. They can be investment banks and regular banks now. Ever since 2008, they kind of changed the rules or whatever. So they're taking all this money and they go invest it.
Yeah. So they're, and so they got bailed out. The people that sold lost, and a lot of people saw their accounts get wiped out. I mean, there's just countless stories of people who've been building their 401ks for 20 years, 25 years. They sold it at the bottom of the crash and lost half of their retirement savings. What do they get? They get nothing. But then the banks get bailed out, even though they may have made risky investments in the sense of they don't have cash reserves to protect them. And so there's always been a resentment towards Wall Street. There's always been that resentment towards these big banks, because no matter how risky, they're incentivized to take risk, because the more risk you take, the better returns you get. And if you fail, you get bailed out. So
and not to get too lost in the weeds here, but one of the things in 2008 was these banks were making these risky investments with these mortgage-backed securities. Basically, they were bundling bad loans together and then betting that package would do well. And one of the things that the hedge funds did, and really when hedge funds took off, is you had some hedge funds that started betting against the banks, that they predicted that the banks were going to lose money. These loans were going to collapse and fail. And when they did, the hedge funds ended up making a ton of money because the odds were against it. So they could invest $100 million and they might make, $1 billion or whatever off of that bet. Something like that, correct? Is that good way to sum it up?
Yeah. So that was the shorting game.
Yeah.
And that's where, some people start to have issues. I mean, obviously the Big Short really popularized some people going against the grain and kind of like building that resentment towards banks. But the second issue behind shorting is it's they're betting against their own economy. When you short, you're betting on something going down, right? When you or I invest money, we want whatever we buy to become more valuable. We want to create more value,
right,
and we want to see this investment go up. When you short, you're betting against it, and you want it to fail or get very close to fail before you ultimately close your position. That way you can make money, because when you short, you make money when it goes down. And so
so maybe just explain that for a second, because this is what I learned this from your video. So what is shorting would be, I am a hedge fund. I'm going to borrow the shares from a broker, like at $100 a share, because I know this company is going to fail, because I'm betting it's going to fail. So I borrow the shares that are worth $100. I quickly sell them. And then the money I get from selling those shares, when the share drops to $80, I go buy the shares back and then I return them to you. And I just made $20 a share.
Yeah. It's really hard to conceptualize, and to keep it, without trying to get too complex into it, you sell before you buy. And so if we talk about, there's a stock trading at $100 a share. If I short it, I don't own the shares. I borrow them and I sell them. So I sell them at 100. And if it comes down to 80, that's when I buy. So I bought it at 80, sold it at 100, made a $20 profit. I just did it in an inverse order where I sold first. Yes. So that's the whole idea behind shorting.
But in the meantime, the company, those shares of that company those shares are of, that company's failing. That's why you're making money. So there's kind of like a weird immoral situation. Like, it seems odd or immoral to be able to profit off of something failing.
Yeah. And this is where people have their other issues. The Wall Street is should shorting be legal, but that's a whole different argument.
Yeah.
And that's up to the SEC. And now shorting is legal. So is it immoral? Well, it's legal. So I guess in Wall Street, morals don't matter. It's the profits that they're looking at. So we're looking at making money. So hedge funds say, let's try to drive this company to the ground. But a lot of short position, meaning a lot of selling, because a stock's price is determined by supply and demand. When you have more buyers, a stock price is going to go up, because now the buyers are going to bid against each other to push a price up. When you have more sellers, the stock price is going to go down, because now the sellers have to fight against each other by cutting prices to get someone to buy their shares. And so when you have a lot of people shorting, it puts a downward pressure on the stock, because when you create a short position, there's a sell. There's a sale happening.
Right.
And so when you have a hedge fund doing a short, now we're talking about millions, if not billions of dollars worth of selling of shares, which pushes the price of a stock or whatever the investment is down. And this is what really kind of what happened with the whole Wall Street bets and the GameStop and the whole kind of hedge funds versus regular people, retail traders, was people on Wall Street Bets. So Wall Street Bets was a forum. It's a Reddit forum. It's an open source forum where people can talk about whatever. So Wall Street Bets is particular about investing in stocks.
Right.
And some people went out there and they said, hey, this GameStop stock is heavily shorted. 140% of its shares are shorted. And this is really hard to conceptualize. I mean, even I can't really imagine what that means, but it means that more of the shares are sold than the actual number of shares out there. Now, this is typically not supposed to happen. And it's actually kind of illegal, but it slid through the cracks, essentially.
Okay.
And so the GameStop stock was just tanked because everybody's selling the stock. I mean, there's more people selling the stock than even shares there are because of all their short position. But now people started buying it and they started posting this because they said, I'm going to buy this and I'm going to try to increase the number of buyers by buying the stock. Because if I can push the stock price up, these people that are shorting it, these hedge funds, could hypothetically be forced to buy their shares, because if the stock price goes up, they're going to start losing money. And in a short, when you're shorting, you can lose an unlimited amount of money. Because if I go and invest in, let's say, Amazon, and I invest $1,000 into the Amazon company, and I'm not shorting it, I'm investing in it like normal, the most I can lose is $1,000.
$1,000. Okay.
Because the stock can only go to zero. But if I short it, if I short Amazon, there's no limit to how much I can lose, because I lose money when the stock goes up when I'm shorting.
So
and
it could go, if the more it goes up, it keeps going up, I'm losing, because that short actually has a time limit on it. Also, that when they borrow the shares to sell them as it goes down, there's a time limit. And if it doesn't go down in that time, if it keeps going up, the sale executes and now I owe money. So I'm losing money.
And what can also happen is if the price goes up significantly, then your broker is going to say, hey, you're down $1 million or $10,000, whatever it is, depending on the size. You need to pay us some money, because we're not going to keep this position where you're going to lose an infinite amount of money and then you're not going to be able to pay. And then we, the broker, are going to lose. So you got to pay money. And so when that starts happening, when your broker starts calling for money, then a lot of people start closing their positions. And so if you're shorting, that means you're buying. And so now if you own a lot of shares and the stock price goes up and you start losing money, you can either pay up, or you can say, all right, I'm going to cut my losses and I'm going to buy. Now, when you buy, that means more buyers enter the market, and supply and demand, more buyers push the stock price up. And so that was the goal. People who were on Reddit were talking about it. They said, I'm going to start buying this because this is what I believe. And so it's pretty sophisticated analysis. This isn't like some, random thing that someone just thought, I'm just going to buy this random stock because I like video games. It was actually sophisticated analysis. And people started reading the forum. They're like, hey, that's a pretty good thought. And they started buying it. And then slowly people started to catch on, and more people started to buy. And then it started to get viral. And then you had like this whole media frenzy about people buying GameStop. And when it started to go up, that's when the hedge funds started losing money. And when these hedge funds started losing money, they were like, okay, what do we do? Do we sell or do we buy? I mean, do we close our short position, or do we just keep paying money now because now we're losing money? And that's when it got crazy, because the retail traders started winning. I mean, the hedge funds were losing money to regular people. And some hedge funds like Melvin Capital is this big hedge fund. They almost went bankrupt because the stock went up so much. And so they actually got bailed out by a couple other hedge funds. But now these hedge funds that were shorting were forced to buy the stock, and this pushed the stock through the roof. I mean, that's why you saw the 1,700% gain.
Yeah, I saw somebody went from $50,000 to $50 million in value of the stocks they bought.
That's insane. It's absolutely insane. And this is called a short squeeze. Which is what it is.
Yeah, okay. Yeah, because you're squeezing the person making the short.
Yes. And it's not the first time this has happened in history, but it's the first time it's ever happened by regular people. Like hedge funds. The reason that I was really kind of, I don't know what the right word, but I was kind of upset when brokerages started regulating traders, because obviously there's risk involved. And I think everybody... Well, okay. So let me talk about this real quick, because there's two types of people that were making the trades. You had one type of people on Wall Street bets that were, you're kind of more sophisticated people. They understood what was going on, or they were trying to stick it to the man. They were trying to stick it to Wall Street. So this is their middle finger to Wall Street. Those are people, these are their initial buyers. And then you had some people that were trying to just get rich quick. They're like, oh my God, the stock is going up. It's going to go up forever. I'm going to make a lot of money. Now, the whole idea of a free market is you are able to invest and make a risky investing decision if you want. I mean, maybe it's not the best decision for you, but you should have that right. And then brokerages started regulating the traders, like Robinhood and all these apps started shutting people down. And obviously they had their own kind of issues, financial issues, but at the core, the thing that everyone had an issue with was, why are you, a brokerage, telling me what's right for me? And so we are beating the hedge funds in their own game, and now the brokerage is shutting us down because of whatever. And so people had a real issue because hedge funds have been able to create these exact same short squeezes for decades. Like the most popular
nobody
one,
stopped them.
Nobody stopped them. It was encouraged. I mean, this is the beauty of a free market, is you can make money either way. And back in 2008, I mean, this was one of the most crazy ones. You had Volkswagen. This is like right after GM declared bankruptcy. Chrysler was on the verge of bankruptcy. This is like the auto industry is absolutely collapsing.
Yeah.
So now it's like, all right, Volkswagen is next. And Volkswagen has a ton of short pressure. Volkswagen is like, they're talking about potentially failing. And so it's like a no-brainer to short them. And so you had all this short pressure. And then Porsche comes out actually. And they were the first ones to be like, wait, Volkswagen has all this short pressure. Maybe they'll be able to survive. Let's start buying the stock and start pushing the stock up. So Porsche comes out and they started buying the Volkswagen stock. And then that was the thing that triggered this short squeeze. And then all of a sudden Volkswagen went from the verge of like the stock going to nothing to skyrocketing. And for a very brief period of time, Volkswagen became the most valuable company in the world based on market cap, based on the actual valuation of the company, just because of the short squeeze. Because now Porsche came in, they started buying, and then all these hedge funds and money managers started buying the stock, and the stock shot up, and all the people that were shorting lost money. But no one cared then. That was the beauty of the free market when it happened in 2008, when the hedge funds got to make money. But now in 2020, when regular people were doing it, they were getting shut down by brokerages. And that's where the issue was, is how come they can do it and we can't?
Yeah, and I'm not sure that I read this correctly. I might have just read a headline and assumed the story. But like Robinhood made some kind of statement that a lot of these financial institutions are their clients, and they have a fiduciary responsibility to protect their clients. So,
well, kind of indirectly. So the way Robinhood works, so Robinhood is a commission-free brokerage. Okay. The way they make money is when you or I go and buy a stock on Robinhood, Robinhood takes that trade and they sell it to what's called a money maker, kind of a third party market mover. And this third party then creates a trade and kind of makes a little bit of money on the spread. So one of the Robinhood's biggest client to do that is a company called Citadel. Citadel is this big fund. And so what happened was, this is kind of the issue, is Melvin Capital, the company that I talked about that was losing all the money on GameStop. Yeah. Melvin Capital was on the verge of bankruptcy. They had lost 50% of their assets through this short in like 3 days. And when I say 50% of the assets, I don't just mean in GameStop. I mean the entire fund's assets under management. Wow. Half of it disappeared in 3 days or so. And so they got bailed out by a couple funds, one of them of which is Citadel. Oh. So Citadel buys Melville Capital Management, but Citadel is also the biggest partner for Robinhood, making the most money off of Robinhood. And so there's this whole kind of, this seems like
it's a conflict
of interest here. Yeah. So that was that dilemma. And, the thing I had an issue with, because, Robinhood says we cannot allow people to make trades because we don't have the funds, because everybody was doing it on margin, meaning they were borrowing money. Yeah. And if things went bad, then Robinhood wouldn't be able to cover those losses. But the people that were restricted trading weren't just the margin traders. I mean, if you were buying the stock with your own money without any debt, you were stopped as well. And so it's there's more to the story that we don't know. And they're playing a PR game, because if they say something wrong, the Robinhood is supposed to be the app for people, and so they're doing everything they can to try to keep their image clean. Because if things come out that they didn't do that, then people are going to leave.
Right.
And so that's the issue.
Yeah, I mean, in Robinhood, and there are other apps too. They have made it very easy for the regular person to invest.
Yeah.
Right. So there is a great service that's being provided there that you can invest with little bit of money. You can kind of learn how to invest. You can do it rather easily. So, I mean, it's this great platform, but then when the regular person who doesn't have a lot, or maybe we have a little bit, but we're trying to do the same things that the big players are doing, it gets shut down, and then we're kind of stopped.
Yeah, exactly. And that's
so what do you think? Do you think there's going to be any kind of like legal fallout from all of this? Do you think that they'll change the laws or change the rules or do anything?
I don't know. Robinhood's been sued by a few people, I believe, few class action lawsuits. What's going to come out of it? It's hard to say. I don't think people are going to get any money out of it. I mean, lawsuits take years to process. The SEC came out. They said they're going to protect retail traders. What does that mean?
Yeah.
I have no idea. I mean, I don't know.
Yeah, especially now, because I think the news yesterday and today is GameStop is crashing, which I kept saying that to people before. I go, even if you play the game that everybody's playing, at some point, because it's a failing company, at some point, everybody's going to lose whoever's left is going to lose their money at some point. It wasn't forever.
Yeah, it's a bubble. I mean, it's a bubble. That's what these short squeezes are. You essentially create a short-term bubble. You cause it to rally up, make your money and sell, and then it crashes back down. The difference here, I think, is kind of the mentality is more than making money. The people that were kind of involved in this, especially the Wall Street bets, the core community, this is their way to stick it to the man.
Yeah.
And so people don't care about making money. They don't care if they lose. They just want to make their point heard.
Yeah. Everybody was saying buy and hold. The idea is to screw over the hedge funds.
Yeah.
That was the whole idea. Just buy and hold. Don't worry about where the stock is at. We just got to do it long enough that the hedge funds lose the money, and then we kind of stuck it to them.
Yeah. And so, from a financial perspective, as an investor, not a good idea, but right. from a more kind of stubboron,
maybe you could call it activist, maybe
activism. Yeah. It's a donation, I guess.
Yeah. That's one way to look at it.
I mean, it's kind of, what is your goal?
So, talking about that a little bit, what is your perspective, Sikhi wise, on not just things like this? We can talk about shorting and some of these things, but stock market, maybe it's day trading, or maybe it's mutual funds and their quote unquote sin stocks, like cigarette companies and like, what do you think Sikhi wise about investing? How should we approach it as Sikhs?
Well, I don't want to give anybody advice. I don't think I'm an expert to say how we should approach it, but I can give you my thoughts on it.
Yeah, sure.
Because for me, I don't invest in things that I don't believe in, and I think that kind of, and a lot of what I believe ties into Sikhi. Like I don't invest in any tobacco companies.
Right. Okay.
Yeah, they can make a lot of money. It's just not something I want to support.
But would you invest in a fund that has a tobacco company in the fund?
Well,
or do you avoid that too? Do you research and avoid it?
So when I'm not invested in too many funds, but I haven't thought about that. I mean, if you're investing in a fund, if a tobacco company is 1% of the fund, I don't think it's too big of a deal. But if it, I mean, like, because it just depends on what the fund is. What is this fund for? Is it like a fintech fund where a tobacco company somehow snuck in, or is this an S&P 500 fund where a tobacco company snuck into the top 500 companies in the S&P?
Yeah.
You know,
I mean,
so
maybe it's not tobacco. Maybe it's Gillette. You know, they're selling razors. You know, I don't know. You know, like you could bring a lot of different things in. You know,
I think it's what's the purpose of the fund? You know, is this a gaming and, you know, drug fund, which I'm sure there are out there. I'm not sure what they are, but I'm sure there's. I think compare that to investing in a fintech fund or investing in a fund that gives the exposure to the S&P 500. I mean, I don't think you can completely be immune to it in that sense. I never even thought of it like that. But I don't go out of my way to try to invest in these companies. Like even the cannabis, I stayed away from all of the cannabis.
Oh, okay.
Just for that reason.
Yeah, yeah. So maybe as Sikhs, we need to be conscientious about how we invest, and we all may have a different line. We might have a different line where we establish it.
Yeah, and I think this is an individual question. You know, I always like to play devil's advocate with myself.
Sure.
Because if you as a Sikh, you understand your morals, and I mean, I'm not saying this is right, just playing the game. If you can go and make, let's say, $1 million off of the cannabis fund, and you can take this $1 million and go do seva with it and go do something better with it.
Yeah.
You know, now is that bad? So it's or whatever the company is, you can replace cannabis with whatever XYZ. So yeah, I think and there's a little bit of room for subjectivity there. And what do you believe? I mean, I don't know. I don't want to say what's right, what's wrong, because I don't think I know what's right or what's wrong. And I'm sure my opinions will change over time.
Sure, but you have also drawn your own line.
I have drawn my own lines, and if someone has a different line, I think that's good for you. I just don't know.
Right. What do you think about like day trading, or maybe not? Maybe day trading isn't even the right, but like treating as a Sikh gambling in the stock market versus investing. Do you have a way that you distinguish that in your mind?
I don't think people go into the stock market thinking it's gambling, because even day trading, people go on with a strategy. I mean, I think day trading.
Well, you go to the poker table with a strategy too.
Well, I don't know. I mean, I think day trading is a little bit different, because people who are day traders, you're typically coming in with, you're trying to do some sort of technical analysis. Okay. Well, what justifies this? I mean, you're going there not with the purpose of gambling. I don't know. I've never thought about it. It's a good question. I don't know. I've never thought of it as gambling. I mean, is day trading more like gambling than investing long term? Yeah, I think so. I'm not a fan of day trading. I don't do day trading. I tried it. It's not for me. But some people who can figure out how to do it can do it very successfully. I don't promote it. I don't like day trading. But now, is it gambling? As a Sikh, I don't know. That's a good question.
Yeah, I had I've never been able to invest in the stock market properly. Yeah. I'm not good at it. I feel like I overanalyze things. Like even friends of mine, they seem to do it so easily. And I feel like it's so much to think about, so much to worry about. It's just not for my personality. Now, real estate, I get it. I everything I got is in real estate, and I'm flipping houses. I got 2 houses I'm doing in New Jersey. I got one I just finished here. I'm looking for more. I'm looking, like my mind works with real estate. I get it. But
so would you consider flipping real estate gambling?
Well, I will say this. There is a way in real estate that you could gamble it. Now, I'm using the word flipping with you but my partner and I, we actually don't even use the word flipping. We always call it rehabbing, because we actually buy a house, we take it from the condition it's in and fix it. And we fix it nice. We're putting in granite, we're putting in new cabinets, new floors. We make them really nice. We're renovating it, adding value, and then selling it for a profit. And even then, my partner Chuck, he always says, what is it? Pigs get fat and hogs get slaughtered.
Yeah, pigs get,
yeah. So, and he's always like, don't be greedy. We knew what our numbers were going into it. Let's stick to our numbers. If we do better, fine, but try not to be greedy about it. Stick to the numbers. So, but there's another side of it where, almost like you were talking about the shorts, where you're selling before you buy. If you have a deal you're putting together, you can flip the paper. And if you have a title company you work with, you can actually arrange it to close on the property that with the buyer, that you're the seller. And then right after that, close with the seller when you're the buyer. Because the money comes in, it sits in the title company's escrow account, and then goes out for you to purchase it, and you just make the spread in between. In some states, I think it's even illegal to do that.
Is that you talking about wholesaling?
But this is wholesaling, but you're doing a flipped closing.
I see.
Okay, because you're closing on the same day. You just flip your closings. Okay, because then I don't ever have to come up with the money. Now, wholesaling can also work like this. I get the property under contract, I go find a buyer for it, and I'm assigning my contract to them for a fee. So now they're just buying, they're the actual end buyer, and I'm collecting an assignment fee. So you can wholesale that way. I can also wholesale in, I just buy the property, put my money up, buy the property, and then go buy another buyer before and not do any work to it and just sell it. That's also wholesaling. So you can, those three different ways you can wholesale. But, I think the first way I described, where you're kind of flipping the closings and you're doing it, that is a little bit like gambling to me. I think it feels a little bit like a little scammy. Even if it's legal, I'm not trying to get too much into that, but I think it depends on what is your focus. And Gurbani tells us our mind should be attached to Waheguru. We should be remembering Waheguru's name. No matter what you're doing, whatever you're doing all day, if you can do it. Now, we're obsessed with money all the time. If we're obsessed with the real estate all the time, and we're obsessed with the stock market all the time, then obviously we're not doing what the Guru's telling us to do, regardless of how you're transacting.
Yeah.
Right.
Yeah. I think that goes down to your personal, what is your kirat karo, right? What is your honest way of earning a living? Now, some people will do that through marketing. Some people do that through their labor. Some people do that through their services. Some people will, do that through whatever. Yeah. And, and that, I think you're right. It's very important to you to be aware of yourself. Where is your mind when you do this? How is it kind of working?
Yeah. And I think even just at a very basic level, if our thoughts are revolving around, Waheguru's name, Anam, we're revolving our thoughts around that, there may be some guilt or there may be some reluctance to be tricky, right?
Yeah.
To be clever.
Yeah,
so,
I agree.
So these kinds of checks can definitely be in place. But I always find it fascinating to talk to people about, especially people that have some insight into investing and in the stock market, especially. I always find it interesting to kind of work through some of those things, because I struggle with a lot of that myself. I mean, we have mutual funds, and I think about that sometimes. I'm like, there's a lot of companies in there that you kind of anti-Sikh, you could say. How do I feel about contributing to that? But then, these arguments exist around, like, sometimes people argue about gas stations and convenience stores. You're selling cigarettes, you're selling alcohol, you're doing these kinds of things, and I think everybody just has to come up with their own personal line how they define.
Yeah, I agree. I mean, yeah, it's hard. I mean, I know some people, good Sikh families that own gas stations, and they tried to not sell cigarettes because they don't believe in it. But then their business was on the verge
the
of
gas
failure.
business goes away.
Yeah,
right?
you
people
lose the
aren't
business.
coming. Yeah.
And so it's like, they had to bring it back. And yeah, then that's a tough. You gotta know yourself, and that's a tough question to answer. And I think there's a lot of individualism involved in that, kind of knowing yourself.
Yeah, definitely. Look, hey, I really appreciate the time. We've got over an hour in already.
Wow.
Yeah, I really appreciate you coming on and kind of talking about all this and explaining it. I know a lot of us are chatting and talking about on social media, and none of us actually know what we're talking about, right? So we're all out there debating what to do or getting excited about stuff. But I think it's really helpful to understand how these things work, because as Sikhs, we have to make sure that we're making our own personal decision about what we're comfortable with. You can only do that if you understand how these kinds of things work.
Yeah, I agree.
Yeah. Well, thank you very much, Jaspreet Singh. I appreciate you coming on the Nihung's Arena. And it's an open invitation. Anytime you want to come back and talk about anything.
This was a lot of fun. I enjoyed this talk.
Yeah, I did too, very much. And like I said, anytime on any topic, let's do it again.
Sounds good. Thank you so much.
All right. Thank you. Waheguru Ji Ka Khalsa.
Waheguru Ji Ka Khalsa.